Thanks for tuning into the Trade Setup. Good morning. I'm Neeraj Shah, and it's the trading day before the Jackson Hole Symposium outcome. At least the most important outcome from there, and therefore pretty crucial. We'll have a good start, but I don't know if there'll be fireworks that will continue in a big way. Though you never know, that may happen too. First, I don't want to confuse you. First, what is Jackson Hole and what is to be expected? Some of you might know, some of you might not know, so I'm bringing you the benefit of everybody. It's the Federal Reserve Bank of Kansas City's annual gathering in Jackson Hole, Wyoming. Two-day conference. It features central bankers from around the world. Attendees this time around include the Bank of Japan, Bank of England, and the ECB. The most important thing, of course, that everybody would be watching out for would be the Fed's clues about the pace of interest rate increases ahead of the September 20 and 21st policy meeting. So that is something that everybody would be watching out for. So that's the long and short of what is Jackson Hole. Now, ahead of this event, the US markets actually did really well. Now, the key question, I'm sure not too many people know, because I think a bunch of Fed governors, of different Fed governors, are actually going to be talking to media only today as we speak. So it's not going to be happening. It's not something that we've heard too much from others, but be that as it may, the US markets actually did really well. The other cues, so as you can see, 1.67% for the Nasdaq. The other cues, dollar index still high, US 10-year yield at 305, still above the 3% mark, and Bitcoin is at 21,544. So cryptos also haven't really shown any material move, at least as of 7:35 a.m. So no big shakes otherwise, but just that the US markets did okay, and therefore the SGX Nifty showing 111 points the last time I checked, but will come up on your screen in a moment. I think northwards of 100 points at least. Yep, just about 100 points. Okay, so that's what the SGX Nifty seems to be suggesting that we will do. So keep that at the back of your mind as well. Now, what's the trade setup for the day? Sharp volatility in the last half hour of trade yesterday, or last hour of trade yesterday maybe, but it was largely due to expiry and not a trend-setting move. I do reckon that a bunch of option writers got taken to the cleaners, and this is where retail needs to be careful. Don't take it for granted. I know last few expiries have been a bit placid, but you suddenly had an expiry which had a fun and games in the last 1 hour of trade and really took the cleaners to some of the option writers. We've seen that happening. Social media is a buzz with a lot of people who lost massively on option or call writing or and put writing as well simultaneously, of course. So writers certainly faced the brunt of the volatility in trade yesterday. The mood, however, you can argue is buoyant per se, but the risk reward, to my mind and to the minds of some of the quant indicators and quant followers, is that the risk reward is not exactly very strong from a long perspective. Yesterday we had Twitter Spaces with two fairly expert traders, and Abhijit Pathak in particular, a fairly experienced trader, Chandan Thapar in his own right, from a Motilal Oswal perspective as well, a fairly experienced derivatives observer and trader and advisor, that too. And both of them anticipated that maybe there could be a bit of a pullback in the markets in the next few days, so be mindful of that. The Nifty IT is weakened further this week too. I think the last 5 days it's cracked about 3% A bunch of stocks have seen short build up, some more technical downside possible in the short term, so watch out for that. And on the flip side, Nifty PSU Bank is looking very strong. It's now closed near its April highs, levels of 2989. A bunch of stocks, Union Bank. I mean, you won't classify RBL Bank as first like that, but it gets bucketed there. A bunch of banks, PSU banks, are doing really well. So do watch out for that bucket as well. There's not too much inflow, so I'm not quite mentioning that. Let's move on to the stocks to watch. Dr. Reddy's, the US FDA has concluded the inspection, and the inspection is closed at the Srikakulam unit in Andhra Pradesh. Watch out for Reddy's today. Watch out for Nelco. The company's partnered with Intelsat Commercial Aviation to offer in-flight connectivity services in India. This could be a big one for Nelco, so do watch out for this one. I don't know if Paytm reacts negatively or no, but I think a US payments firm plunged nearly 14% after its the 2023 revenue forecast missed estimates. Now we've seen a lot of times collateral damage happening to Asian companies because a US company uh, couldn't do as well or otherwise. So maybe Paytm has a down day today. If it does, then you know why it is happening. So keep this at the back of your mind. The other thing we have to keep in mind is that the ACC Ambuja open offer begins today, and therefore both those stocks, in one case slightly higher, Ambuja's case higher than the open offer price already. But yeah, there could be activity here. I don't know if it's tradable per se, but just keep in mind because it's such an important event the next few days since the open offer opens today. You got to keep in mind. Speaking of some of the Adani Group stocks and standard disclaimer that they own part of the platform that you're watching, but if indeed the Nifty rejig were to happen in the next 1 or 2 or 3 days, do watch out for resultant impact on Adani Enterprises and Shree Cement if that is what the swap eventually turns out to be. Most analysis seems to suggest that that is how it will turn out. The thing to keep in mind, viewers, is that, I think 3 4 years back, my erstwhile colleague Darshan Mehta had done this wonderful piece of how there was an index curse and a getting booted out of the index boon for immediate stock price performance. That companies which got included in the index actually tended to underperform for the next few days, and companies which got booted out for a 6 month period or a 1 year period actually did well. Now, could that happen if indeed when the rejig does happen, and if the rejig has an Adani Ent coming in and a Shree Cement going out, could Adani Ent correct and could Shree Cement actually gain? Because Shree Cement has corrected quite a bit this year already. Remember, 10, 15 odd percent or slightly more than that YTD losses for Shree Cement. Could it reverse that? It'll be interesting to see. By the way, speaking of divergent moves, look at what's happening in pharma in companies which have that same bucket, right? So, Divi's is the leader by a margin, but I'm just saying loosely put, API players, Divi's 1 month has corrected 4.23%. Lotus Labs has gained 18.57%. There's a 23% differential between the two. Some point of time, this will reverse. So I'm not saying Lotus will correct or the Divi's will gain, or both could happen as well, but just pretty interesting. And with reason, of course, Lotus has immediate earnings triggers, and therefore, yes, it is anticipated to do well because it's Q1, Q2, quarter earnings were good, Q2, Q3, Q4 earnings look promise to be good. So therefore, there is merit there, but there's quite a stark performance there. Similarly, in Metropolis versus Dr. Lal, Metropolis has corrected 6%, again, maybe with reason because the CEO has also resigned. The numbers were ho-hum. Dr. Lal, and there's this whole pressure right around, but that should reflect in Dr. Lal too. Interestingly, Dr. Lal has gained tremendously. There's massive long build-up that has happened in Dr. Lal Path Labs as well. So something's brewing there. Maybe I'm not aware of it. Maybe you are. If you are, in the comment section, please put up. It'll be interesting to see that what the street knows. So yeah, but very interesting divergent moves, I thought, for some of these. What else? There is a recommendation. Okay, broking. Right. So let's do that. So MK has come out with the, yeah, okay, no, let's stick with this. Jeffries on mid caps. So they are saying that 8 of the 15 coverage companies saw YOY expansion in operating margins in Q1. Key ones being HEG, Polycap, Crompton, KGC, and Kajaria Ceramics and Dixon. Whereas margins were impacted in Havells, Grill, and Pipes. Or August and September, key input commodities have corrected by 20 to 30%, with about a 10 to 15% average price hike in FY22 could aid margins from second half FY23. And they expect OPM to start normalizing from FY24, led by premiumization, volume traction, and softening commodities. Viewers, almost all managements who've spoken to me have said that Q2 will see trough margins. Margins will decline in Q2, and then Q3 onwards, margins will start picking up. Jeffries is pretty much saying the same thing they note on their coverage universe. Pretty interesting, those set of stocks. By the way, Morgan Stanley has a focus note list as well out today, and I think that's a story that we'll put out a bit later on in the day. You might want to read that. What is it that Morgan Stanley prefers in tech and telecom? The most preferred and least preferred in terms of the indices and in terms of specific stocks as well. I did read the note. It seemed that emphasis was amongst the top picks in the IT space at least. Then I haven't had a chance to do more. So yeah, but do watch out for this as well. Watch out for Crompton because MK has a note. MK Quant has a note on Crompton Crompton Consumer. Yeah, they're saying that, or is it Crompton Greaves? Yeah, I think it's Crompton Consumer. Be that as it may, Crompton Greaves. They're saying that it's broken out of a triple top resistance at 403 with very high volume, more than 4x the average weekly volume, and high OI change. The delivery volumes 30% above the monthly average on Thursday is what they have observed. The bullish MACD crossover pattern, which signals more bullishness ahead. So that's interesting. And their target is of 450 for Crompton Greaves Consumer Electricals for a long trade is what they believe could happen. So let's wait and watch if that were to happen or not. Some other stocks before we wind up and get you the views from Chris Wood as well. So yeah, watch out for Nelco for sure. There is there is an interesting. So watch out for Nelco. This one promises to be a really good one. Watch out for the fiber optic companies, because telecom companies apparently now don't need not to lay cables or install towers or private property. So this could actually usher in fair degree of robust growth on some of those sectors as well, some of those related stocks. So do watch out for that. Reddy's, of course, EIR received, so that could be interesting. Let's wait and watch. There's a question about view on paper stocks. Well, the earnings look rock solid. I don't know about the impact on margins because of pulp prices or other prices. We're going to be talking to JK Paper next week. So that could be a conversation wherein you would want to tune in, Sajju, in order to try and understand more. But yes, the sector is getting re-rated for sure. You are right, due to price hikes and sustainability of those. We'll try and question the managements on that very topic when we talk to them next week, at least JK Paper. So do maybe tune in on that conversation. Lastly, before we wrap up, Chris Wood, in his latest note, speaks about the resilience of the Indian markets. He says that the reality is that the Indian market has so far surprised everybody, including greed and fear, by its resilience in the face of bearish sentiment triggered by the wave of foreign selling, prevailing high valuations, and monetary tightening. This resilience should be viewed as reflecting the strength of the structural story. And viewers, all of you would know that these are the very points that everybody keeps on saying when they are negative. Somehow the market keeps on surprising everybody. We've heard a number of people in the recent few days talk about how the markets will buckle down. Fundamental people will buckle down. We had a JM Financial guest, we had Avendas, Andrew Holland. I think Spark Capital said that they are bullish, but they won't be surprised if there's a pullback. So most people are actually talking about a possibility for pullback, but the markets are surprising everybody. Let's wait and watch. If they continue to do that, the bulls will certainly be happy if that were to happen. So lots that could happen today intraday, but please keep in mind, don't try and be a hero and carry very large overnight positions, because you don't know what will come out of Jackson Hole, and it could be a big market moving event on Monday. So please be mindful of that. Thanks so much for tuning in. Have a safe day ahead and have a happy weekend. And to all Jains out there, a very happy Mahavir Jayanti. It is over the weekend. So very happy Mahavir Jayanti to all of you.